My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job's not just to entertain, but to educate, teach. Call me at 1-800-743-CNBC or tweet Jimmy Chill at Jim Cramer. All right. Unless. I keep thinking this is an unless market, as in we'll go higher unless this or that happens to derail us. My problem? Even on an encouraging day where we opened down hard and then rebounded, I like that. Dow only dipping just 26 points. This will be actually inching up 0.11%. NASDAQ advancing 0.20%. Wow. There are an awful lot of unlesses out there. It makes me a little more concerned, even as we've been experiencing pretty sluggish days lately, and that works off the dreaded overbought condition. So you know what I'm going to do? Tonight, I'm going to tick down the unlesses that need to be on your radar screen, even if you're a snorting, stampeding bull. Unless you're a Norman, the breeding bull we brought in to impregnate our late Longhorn ambush. And he just charged around all over the place instead of doing his darn job. But that was back when I was trying to be a gentleman farmer. That is an earlier version of, yes, you guessed it, Jimmy Chill. For every other bull, though, here's what unlesses you should be thinking about. The first unless, Boeing. We interviewed Gary Kelly, the CEO of Southwest Air, earlier today at Squawk on the Street. And somehow he was able to deliver a good quarter despite a ton of dependence on that 737 MAX. Gary's not happy, obviously. He explained his earnings would be dramatically higher if the MAX were flying. A number so big that I could easily have seen this stock hitting a 52-week, if not all-time high. But he swore allegiance to the MAX, and perhaps more important, to Boeing. A great American company, he pointed out. Getting that plane back in the air is the most important thing that could happen to help Southwest and every other airline that depends on it. If you knew when it was coming back, you'd buy this stock hand over fist. Kelly says that the public won't mind flying it once it passes inspection. The pilots know whether it's safe, and they wouldn't do anything to injure their passengers. Plus, it's their lives on the line, too. But it's not just the airlines that are hostage to Boeing. Today, Morgan Stanley upgraded General Electric, arguing that its turnaround is at last at hand. GE's long-term care insurance woes sound like they are, let's say, handled. The black hole that was the power business is being fixed, and aerospace is pristine. Couldn't be better. GE is a total winner, unless Boeing fails to get this darn plane certified. GE is among the many aerospace suppliers who won't be able to make their numbers unless the 737 MAX goes back in being sold and is in production. How big a deal is this plane? If Boeing keeps botching this, it could shave as much as half a point off our gross domestic product, according to the president. Southwest and GE are among a host of companies that could be great investments unless the Federal Aviation Administration refuses to approve the MAX by July, the outside date that Boeing's giving us. Now, I hope that Boeing's practicing UPOD, under-promise and over-deliver, with that new deadline. Everybody seems to have a high opinion of David Calhoun, Boeing's new CEO, and that includes Gary Kelly himself. So I'm hoping he'll get it right. That's a lot of hope, though. What other unlesses do we need to watch for? Well, there's the impeachment trial. Following that one at all? Now, I've been telling you the result will be a foregone conclusion, which makes it a total sideshow as far as the stock market is concerned, although I think it does make good TV. But I can't imagine what the Democrats could say that would make the Republicans break ranks against the president of their own party during an election year. Could there be an unless here, though? Some smoking gun that blows the case wide open? It's possible, although I think it's incredibly unlikely, especially since the Senate's refused to consider new evidence. Still, it's a possibility, however small. Third unless, the coronavirus. It's a frightening thing, especially now that China's quarantining entire cities, not just Wuhan, where the epidemic started, but even Beijing now. At the moment, 25 million people are currently on lockdown in China. Now, this coronavirus isn't like the super flu from Stephen King's The Stand. It's not Ebola. It's not even SARS, which did kill about a tenth of the people who caught it. Nevertheless, it's very scary. Fortunately, history tells us we can quickly get this epidemic under control. Unless, that is, the Chinese government isn't telling the truth about the mortality rate or how easily the disease can be spread. China's track record, frankly, has been pretty mixed when it comes to this kind of thing. Their government tried to cover up SARS, and it led to hundreds of unnecessary deaths. Hopefully, they learned their lesson. If China can get the outbreak under control, there's not that much to worry about. But if they can't, the economic ripples will do real damage to hotels, casinos, cruise lines, luxury retailers with Chinese exposure, to say nothing of the airlines. The fourth unless? Apple. Did you know that Apple's stock is now the largest in every major index? The company sells the most beloved products I've ever seen, and now they're tacking on this incredibly rapidly growing service revenue stream. Among the credit card, Apple TV, Apple Care, iCloud Backup, the iPhone 11, it's all looking good. Unless, that is, we've misjudged the level of demand, something that could cause this red-hot stock to get crushed. Now, I've been taught that when you have this level of own it, don't trade it conviction about a quarter, as I do, there will be people who get cocky and pile in the stock at the last minute. Those traders are going to be your enemy if there's even the tiniest of shortfall. I love Apple, but the stock absolutely cannot handle disappointment here. And thanks to its enormous size, the averages won't be able to handle it either. Big unless. Fourth unless, I'll make that fifth. The economic backdrop in this country is pretty close to perfect for this stock market. We have nice growth. We have no inflation. Federal Reserve on our side to prevent any potential slowdown. Unless this turns out to be a situation like we had exactly 2 years ago in the lead up to the Super Bowl. That's when the employment number came in way too hot and the Fed switched from our friend to our enemy. The newfound fear unraveled a whole set of strategies involving the volatility index that we didn't even know about, only put a huge ton of pressure on the S&P 500. Now, we got clear sailing right now, unless history repeats itself with the Fed. Bottom line, you can always play the unless game, but I bring it up because the higher this market goes, the more likely it is that we won't be able to handle a big unless, let alone 2 or 3. So when you start feeling overconfident, when you turn into snorting Norman the bull, just remember that bad things can still happen. So do your job of protecting yourself instead of running all over the place to no avail whatsoever. Let's go to Gianna in my home state of New Jersey. Gianna.
Booyah, Professor Cramer. Here with my daughter, Gianna. She has a question for you about a stock she owns. Hold on.
Big booyah to you, Cramer. I'm Gianna. I'm 6 years old. Me and my dad watch you all the time. We love your show.
I'm going to cry.
One step in Disney. I want to know if this is a good time to buy more Disney stock. Thank you. And booyah!
Holy cow. Social consciousness. She is fantastic, and I am going to tell her, yes, I think Disney can still be bought, and the stock was down today. And do other shows, I'm asking my executive producer right now, Regina Gillian. Regina, how many 6-year-olds call in on the other shows? Were any 6-year-olds interviewed at Davos?
I don't think so.
I rest my case. Let's go to Cam in Vermont. Cam.
A big booyah from Vermont, Jim.
Cold but great.
I'm a long-time listener and a first-time caller.
Yes.
I wanted to thank you for being an inspiration to young investors like myself and for helping me better understand the stock market.
Oh, but Cam, there aren't supposed to be any young investors. I learned that. People are supposed to be turned off of the stock market. Wrong. It's because people drive them off. They make them fearful.
Cramer.
All right, let's go to work.
All right, so my question is in regards to Spirit Airlines, ticker symbol SAVE. So it does not have any flight exposure to China, which is key given the growing concerns over the coronavirus. It also does not have the level of 737 MAX exposure of its peers. SAVE has severely underperformed the major indices and other airlines in the last year.
Right.
However, could investors buy the stock at these levels, or should we wait just in case?
Cam, I think it's okay. I mean, JetBlue, which is another company that historically has not done that great as a stock, they reported a good number and the stock flew. So I'm going to bless yours for half a position, the other half after it reports. Okay, the higher this market goes, the more likely it can handle a big unless, and there are 5 unlesses. I don't want you to get too confident. Remember, we're fine, but we can't handle unless. On Mad Money tonight, Grubhub just unveiled a new digital platform for users to place pickup orders through the app. The answer comes as new data shows that DoorDash has edged past Grubhub to become the leader in digital food delivery sales in the U.S. Could it be a seamless way for the company to add to its potential profit? Or is the company for sale? I sat down with the CEO. Then, one of the more interesting stock market narratives of 2019 was the comeback of Snap. But can that move continue in 2020? I'm going to give you my take. And what's on the horizon for First Horizon in the new year? I have got the CEO, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.